Alrighty guys, this is Katie Medina with New Way Realty Group.
Hey, this is Jacqueline Doherty with Texas Lending Pro.
And we are here to give you guys some important information on the home buying process and just want to kind of talk about a few things, some common questions that we get asked along the way. So the first thing is I have a lot of people who reach out to saying, I'm interested in buying my first home, just don't really know where to get started. And while it's always advised to contact your trusted realtor, the first step that you do have to take is to talk with a lender on getting pre-approved for a mortgage. So we kind of want to talk about the difference of being pre-qualified versus being pre-approved first.
Yeah, so the big difference with a pre-qualification, that means you verbally talk to a lender, let them know what you make, about how much your monthly payments are, car payments, credit cards, etc. And we get an idea of what you can afford, but nothing is verified. So a pre-qualification, while it can be helpful in giving you an idea of what ballpark you'll be looking at, you really need a pre-approval, which means we take a look at your info, we have you apply, we look at your credit, look at your check stubs, we verify the assets that you have to come to the table with. And that's how we come up with what your price range is that you're pre-approved for.
Yes, yeah. I always like to refer to it, it's kind of like online dating, right? You kind of see the picture of what their profile looks like by being pre-qualified, but when you go on the date and you actually see what they're all about, that's getting pre-approved. So yeah, there is a difference. Pre-qualification is just that verbal approval based on your application alone. Mm-hmm. Being pre-approved is your lender has taken a look at your income documents, your credit score, all those things.
Well, and there are a lot of nuances and laws and things with lending that you might not be aware of. So there could, anything from the length of time for employment, rules around employment gaps, and things like that, that it really does, we really do need to take a look at that info to make sure that you don't go under contract and then come up with an issue under underwriting, something that could have been avoided if we knew beforehand.
Yes, yeah. So that's why it's very, very, very important to get pre-approved up front before you start shopping for homes and before you go under contract. So you may be wondering, how do I get pre-approved? How do I take that first step and what do I need in order to start the process? So Jackie, you take it away.
So we try to keep it pretty simple. I'll have you apply through me. I can send you a text, an email. Everything's done online nowadays. And what we do is we have you upload your 30 days of recent pay stubs. We look at your W-2s for the past 2 years, or if you're self-employed, we'll look at your full tax returns. We look at your credit, so we'll pull credit. That way we can see what your monthly liabilities are. And basically what we do is we take a look at your credit and we look at your income compared to your monthly liabilities. That's how we come up with what's called the debt to income ratio. And that's really what determines the price level of home that you can afford. And so that's a way for us to say, hey, you make X amount of money, you can afford a monthly payment of $2,500, $3,000, etc.
Yes, exactly. And then they also take a look at things like property taxes and HOA fees. Maybe if you have to owe mortgage insurance depending on your down payment. So your lender is really going to be the person that you need to speak to up front. That way you know what exactly to be shopping for, because the last thing that you want to do is shop for a home that you can't afford.
And another part with the pre-approval process, we'll come up with the range of home that you can shop for. We'll create some cost sheets to give you an idea, because hey, just because you can get approved for a $400,000 home, you need to be comfortable with that monthly payment. That's the most important part. So we'll make up some detailed cost sheets to give you an idea. Hey, this is what the monthly payment is for this price house, and also closing costs. Because again, just because you are pre-approved for a certain amount, it's not necessarily what you want to spend. And so the pre-approval process is really where we get a good idea of what sort of money do you need to come to the table with. We also look at your bank accounts or your assets to see, do you have the money to come to the table with for those transactions? And it really makes the process for the realtors a lot smoother, because we don't want them out there showing houses, or yourself. We don't want you out there looking at houses and at the end of the day, you're not comfortable with the payment, or you maybe don't have the money to put down right away. So that's really where we come up with our plan.
Exactly. And always just being upfront and honest about your situation, financials or whatever it may be. It's crucial because this is a very, I don't want to say invasive, but it's kind of an invasive process of digging deep into your financial situation and understanding what you can afford, because this is probably the largest transaction of your lifetime.
It is.
So let's talk more about money. So where does this money, or where can this money come from? Because yes, nothing is free, even though there are things advertised for free, but it's going to be coming from one way or another. So let's start with down payment. Where can you get your down payment from?
Yeah, so something we get asked a lot about is, where can I get my down payment from? And obviously, your checking account, your savings account, we know that. But there are other sources. A lot of people don't realize you can borrow from your 401k without being penalized for the purchase of a home. So we've got retirement accounts. Gift funds is another really big, very utilized, that a lot of people might not know about. So if you have, an uncle, mother, family member that maybe has that money access to, you can always borrow it from them. And we do source it and we document it as well. But that's honestly, it's very common. And I think a lot of people don't realize that.
Yeah, especially for first-time buyers, having a family member or friend who can gift you the funds for your first home is huge.
Right.
Because the investment alone is always worth it. Owning a home is always going to be worth more than renting. If you think that you can't afford to purchase a home, you'd be surprised at what you can. Another
source that people tap into is selling items. So if you've got valuables, a lot of times people will turn around and sell, guns, jewelry, etc., whatever, just to come up with a little extra cash. Something that I want to point out that is not acceptable for down payment is large cash deposits. So what we do is we source that income. It has to be seasoned, right? So that means that whatever money you're using, it has to have been in your bank account for at least 60 days, which again is why a lot of people end up doing gift funds, because maybe, if you've been saving, you got 5,000, 10,000, in your closet, you can't just go dump that in your bank account and use that for your transaction. It's not going to work because it's not seasoned.
Exactly. Yeah. So another thing that gets asked quite often about down payments is, do I have to put 20% down? No, you don't. There are so many different avenues and programs that require a small down payment up front. That is no longer the thing of 20% down.
Yeah. Most of our programs, so for a conventional loan, you're looking at 5% down. And actually, if you're a first-time home buyer, you can go as low as 3%. For FHA loans, you can do as little as 3.5% down. And VA loans, 0 down. So there's a lot of options. And I would say, I think the average down payment for first-time home buyers in America is around 5%. So most people are not putting down 20%. They're just not.
Exactly. Yeah. So if you can save 3 to 5% of the purchase price of the home, then you are eligible, for that down payment. So that is definitely a myth. And we always like to advocate for our first-time buyers or anybody who's purchasing a home that that's no longer the case.
Right.
So another thing that we get asked often is, what should your credit look like if you are trying to prepare to purchase a home, and what those scores should be, and if you are eligible?
Yeah, you definitely don't have to have perfect credit to be eligible to purchase a home. We have programs that go as low as 580. I will say anywhere in the 600s, the low 600s, you'll be eligible for FHA loans. Around 680 and up is when we start to get into the conventional loans. And what we do is, when you apply, I'll take a look at your credit profile and really see where your particular situation stands to see what sort of loan programs would be best for you. And if your credit is not quite there yet, which is something we see a lot and it's totally normal, we'll actually come up with a game plan with you. If you don't know where you stand, you don't know what you need to do to fix it. So I always like to let everyone know, don't be afraid, don't be scared to take that initial jump to see where you're at, because we've seen it all. I guarantee whatever you have on your credit profile is nothing that we haven't seen before. So really take the fear out of that and get started.
Exactly. Yeah, it's always better to know where you stand right then and there, as opposed to putting it off just because of the fear of what your credit report may look like.
We have a lot of clients that we'll work with for 6 months to a year. I mean, it's just part of it.
Yeah,
so,
exactly. And
totally normal.
Yeah, and lenders are a great resource, you know, for kind of getting together a roadmap of what you should be doing. If it does take you 6 months or if it does take you a year, they have ways of telling you, hey, pay down this, you know, maybe let's trade, you know, get rid of this, whatever. They're not, of course, they're not financial planners, but they definitely have the knowledge to increase your credit score if needed.
Yeah.
So I think you and I have both seen this in transactions. There's a couple things not to do while you are obtaining a mortgage. And it does fall back on that credit issue of do not open any new lines of credit while you are under contract on a home.
That's a big one. Because again, the numbers that we come up with to pre-approve you, they boil down to the monthly liabilities that are listed on your credit report compared to your income. So we have that ratio, that big debt to income ratio. That's what we're always talking about. So if we approve you based off of the numbers when you applied and you turn around and you add, you know, anything from a credit card, store credit cards, you know, Kohl's card, Target, any of that stuff.
High interest rates.
Furniture shopping, car shopping. Please do not go buy a car when you're in the middle of trying to purchase a house. But a big one that people don't think about is the furniture shopping, because obviously you're buying a home, you want to furnish it. That's really exciting, but you need to wait till we close because any inquiry on your credit like that, we actually, although we check your credit beforehand, before a loan closes, it gets rechecked again. So, I mean, anything from people buying this stuff the day before, it's going to show up and it could cause a problem.
Exactly. And
best to avoid.
Exactly. And so one thing about purchasing a home is that nothing is ever finished until it is closed and funded. So always just be wise when, you know, getting a mortgage, purchasing a home. Get pre-approved first. Let's figure out the financials. Then let's go shopping. Yeah. And while you're under contract, then, you know, just steer clear of any other credit inquiries or applying for any other kind of loans while you're under contract for a mortgage. Yeah. So if you ever have any questions on the home buying process, again, my name is Katie Medina. I'm with New Way Realty. You can reach out to me, or this is my preferred lender, Jackie with Texas Lending Pro. Yep. We're always here to help.
Thanks.